Hello my fellow freedom builders and welcome back to the channel. Today it is Sunday the 21st of June and I actually had a plan of taking a day off from making videos. But that was not supposed to be because all of a sudden I started getting some questions about this Wirecard stock. And if you have been following just a bit along on the financial news sites this last week, you will know that there has been some trouble for the German based company called Wirecard. Now, what is the problem? Well, the problem is that they're kind of missing a bit of money, but I'll get back to that in a second. First of all, the video here is not diving into a potential fraud case here because everything is new and the rumors are flying, and Wirecard is saying that there is a perfectly good explanation for everything, and there might be. So in this video I will not judge whether there is fraud, whether everything is okay, because I simply don't know enough about it. What I will do, however, is that I will take my strategy. As you know, if you have seen a lot of my videos, I explain my strategies into detail, so there's no secret here. So what I do like by having such a well-defined strategy is that you can go back. For instance, in a case like this with a company that really drops quickly in price, and you can see, well, would my strategy have prevented me from getting into this stock, or would I have been tricked into it, losing some money? So that is what I'm going to take a look at today, whether we could have been kept out of the Wirecard stock. I should say that I don't own Wirecard stocks and I haven't owned it at any time, but we'll have a look back in time to see if I was allowed to own it following the rules of my strategies. So let's have a look at it. The problem is, first of all, that they are kind of missing $2 billion euros. I think that is around $2.2 billion or something like that. And don't you just hate when that happens? You're walking around with your wallet in your pants and you think that you have 2 billion euros in there, and you're going in for an ice cream knowing that you have 2 billion euro, and you look down and the wallet is empty. That is kind of what has happened. It has happened in a way where the auditors, the accountants that needs to sign up on their numbers for 2019 are saying we simply cannot do that because we cannot find the money. There are 2 billion euro that we cannot account for anywhere in the system. And the auditors here, as far as I recall, is Ernst & Young. That is one of the huge heavy boys in the accountant niche here, in the accountant sector. And they have their best guys on this stuff, and well, they can't find the money. And as I said in the beginning, I'm not clever enough. I simply cannot figure out where this money can be gone or where it could be found. But right now, what the accountants are saying is the money are missing, and what Wirecard is saying is there's an explanation for everything. All right, so far so good. What this has resulted in, if we are just having a quick look at the price chart here, when we are looking at the daily chart, and right now I'm just looking at the US version of the stock, since that is not many of you are trading in on the German stock market. So this is the price in US dollars, and as you can see, in August 18 it was up around $115, and now it is down at something like just below 14. So that, of course, if we are in a process of building freedom and building a good solid financial future, then of course we would like to stay out of stocks like this, wouldn't we? And the question now is, could we have stayed out of it following my simple trend following strategy? Well, first of all, just a quick look here. Wirecard shares plunge over 50% as financial report delayed again. This is an article about all the details here. And what I will do is that I will link to this article below the video, and I'll also link to a more of a top-down story here, what's behind the remarkable rise of German fintech Wirecard. Because if you don't know Wirecard, it is a huge player in the payment in the fintech market. And they actually, when they were priced the highest, I think they actually had a market cap larger than the huge Deutsche Bank. which of course is not something to brag about, since Deutsche Bank over the last, several years have plummeted in price because they have a lot of really dubious derivatives on their book. And that's an entirely other story, that Deutsche Bank might be able to simply destroy the entire euro if they go bankrupt. But that's another story, as I said. Wirecard was larger in market cap. I'm not sure they are anymore, but they were. And here is the entire story as to how they became so big. You can read that for yourself. That's not what this video is about. But let's have a look, because as you know, if you have followed my videos, one of the first things I usually do when I get interested in a stock is that I check up on the fundamentals. And one of the tools I use for that is Stockopedia. I really love that tool. There's also a link to that below. And as you can see, if I had gone in looking at the Wirecard stock here, I could have seen here that the quality of their earnings is 97 out of 100. So that is absolutely perfect. The value is great. That is of course measured after this big plunge in the price. The momentum is not that great. That it kind of speaks for itself here. But the overall stock rank is 84. So that was definitely a stock that I was allowed to buy. I do like to see at least the quality here and the stock rank, also a bit of the momentum, but quality and stock rank should be above 84. About 70, and now it is 84. So, all right, the first filter here actually allows me to go into Wirecard. Perfect. Let's just scroll down and look at some of the numbers I normally look at, and you know them if you have seen some of my stock of the week videos. I take a look at not too much the PE ratio, but here the PE ratio is actually absolutely fantastic. 4.8, the PEG ratio 0.2, fantastic. I like that to be below 2. And if you don't recall, the PEG ratio is the PE ratio divided by the estimated earnings growth next year. So that is fantastic. They are planning to grow a lot. Earnings per share growth, great. Not the highest dividend yield, doesn't matter, it is a growth stock, or it was supposed to be. Price to book value, EV to EBITDA, price to free cash flow, all the numbers checks out. Fantastic. If you've seen my video from the other day about the Petrosky score, that is this F score here. 7 out of 9, absolutely amazing. All right, so let's have a look at some of the numbers. What I do like to see is earnings per share normalized, going up in a straight line, fantastic. As you can see, the earnings per share growth numbers, 11, 19, 30, 30, 37, 45, 50, that is amazing. That is kind of the company we like to be invested in, because they are not only trending in the price, they're trending in the numbers as well. All right, we have the free cash flow, just moving along as I like to see it. A fantastic free cash flow here. We have, if you are into dividends, well, you can see the dividend cover is just out of this world. We like to see that above 2, but they are somewhere around 15 or 20 here. Amazing. It all checks out. Interest coverage, 2.5. Quick ratio, 1.8. Sales growth, everything is good. And you can even see here the working capital. How much liquidity do they have to work with? And this is from 2018. Then there is the trailing 12 month. I'm not looking too much at that. And then, of course, we should be able to see some 2019 numbers, but they are the numbers that I'm missing right now. And as you can see, just with simple putting some numbers together in your head, the working capital, that is their liquidity. That's what they have to work with right now. Just around 1.6 billion dollars, I think this is. I'm not sure if it is euro or dollars. Doesn't really matter here. They're almost the same now. But as you can see, if they're actually missing $2 billion on the book, then they are kind of in negative liquidity, which is not good. But from these numbers, we wouldn't know. Because if we hadn't read the news, if we weren't aware of all the bad publicity they're getting right now, well, then we would just say everything is fine and dandy here, wouldn't we? So we are looking down here, all right, the analysis, they used to say buy, almost a strong buy, and now it is somewhere between hold and buy. But we're not looking too much into that. Okay, well, everything pretty much checks out. So if I were interested in buying Wirecard, it would definitely pass my first filter here. So that is an important thing to acknowledge when sometimes when you see potential fraud. Again, we don't know if this is fraud. It can be that there is a perfectly good explanation here. But if it is fraud, then all the numbers here, they don't tell us. And I often get told by people when I'm talking about technical analysis that we're going to in a second, looking at the chart, I'm often told that technical analysis is just some bogus and reading tea leaves because we are only looking at the historic development. Well, guess what? Now that we're looking at the fundamentals, we are also looking at the historic numbers here, and they are all telling us that everything is fine, and we might be buying simply a company that is filled with fraud and missing all their money. So the fundamentals are not always that good as well. So that is the reason why I am combining fundamental analysis with technical analysis, because sometimes the technical analysis part can show me something that the fundamental can't. So let's have a look at the technical analysis of the stock. And let's just look here in my normal setup where I have my daily chart here to the right and my weekly chart here. And if you know have seen my videos and know my strategy, you know that I'm primarily looking at two things. Or three maybe. I'm looking at the price action here on a weekly chart, that's fine enough, but then I'm looking at the 14 period RSI, that is 14 weeks in this case. I like that to be above 50, that is the dotted red line here. And then I'm looking at the CRS indicator, and all of this can be found here on the YouTube channel. If you look at the playlist called Learn My Strategy, all of this is explained. I'll not go into depth with that now, but what this tells me is if the stock market or if this stock is doing better than the overall stock market. Because one thing is to have a stock that goes up, but we want stocks that go up more than the market. So what I like to see before a stock is in a green zone, as I call it, is I like the RSI to be above 50. And I like to see this gray line, which is the comparative relative strength line, be above both of the moving averages here. That is how simple it is. So if we are looking back, and we are looking back in the beginning, and I should just mention here, the CRS here, if some of you are trying to set this up just like mine, what I've done here is that I am comparing with the SPY. I know it is a German stock, but right now we are looking at the Wirecard on the US market, and not many of you, as I said, are investing in the German market. So I just took the liberty of comparing it to the SP 500. But I also compared it to the DAX earlier today, and it gives kind of the same results. So what we can see here is that from down here somewhere, when the price was around 25, we were actually allowed to buy the stock. Now this is from a weekly chart, so this is where I get my green, yellow or red light, and I need to have a green light before I can go into the daily chart and make my timing. I'll get to that in a second. But anyway, around 25, 30 down here, I was allowed to buy the stock because the RSI was above 50 and the CRS, the comparative relative strength, showed me that the stock was doing better than the overall market. Okay, so the stock went up and up and up, and often I'm asked, what is your target? When are you getting out? Well, I'm getting out when I get a sell signal. And what we can see up here is that in around October 18, you know, that is where we had this crash in the market too, where Fed started to unload some of their of the bonds from the balance sheet, and the entire market tumbled 20%. And we would have been sent out of the stock somewhere up around 80 or 90 here. So as a trend follower, we never get out at the top here. It could be nice to get out at 114, but we would probably have gotten out around 90 somewhere, 85, 90. Not that important here. So we took a ride here over a couple of years from around 25, 30 up to around 85, $90. That is a great rise. That is triple the price here. Okay, so the interesting part here is we have been investing in it lately. And the simple answer is no. Because what we can see here is that we got our sell signal around here. Now, we have a couple of instances where we are in a green zone. So for instance, this week, we had an instance where we were above the 50 line here, and we were above the CRS. So it tipped into green zone, and I'll show you that in a second, why we wouldn't have bought there. It did the same around here, where we were just up above all the lines here, and it did the same here. And that is actually the last time where it would have been allowed for me. Now, it's not even true. There was also a green zone here for just 1 week. So if we were just looking at the weekly chart, we could be thinking that we might have been tricked into this sometimes here. But those of you that have followed my teachings here know that what I also like to see is, first of all, I like to see that the RSI down here on a daily chart is above 50. That is the case here. But what I do like to see when we get a green zone signal here on the weekly chart is I do like to see the chart come up here. The black one here is the 20-day SMA, the simple moving average. And what I do like to see is a price that shoots up here, kind of leans on the 20 SMA that goes up here and then bounces from that. That is my entry signal most of the time. When a stock goes down below the 20 SMA and kind of stays there like this, then I'm getting out of the stock. That's how simple it is. So here we wouldn't have gotten in. The first case, nope, we wouldn't have gotten in. We have very strict rules. The next case here, we got a green zone and we might actually have gotten in here around, it is a bit hard to tell, but let's just say that we would have gotten in here around 85, something like that. We would have stayed in for a little while, but then we would have gotten out around 80 because of this rule of establishing a price range below the 20 SMA. So I might have lost 6 or 8% there. That's not really a problem for me. That's part of the game. Here, probably wouldn't have gotten in, but let's just say for the sake of it that I would have gotten in at 87 and gotten out around, yeah, with something like 10% loss here. That's how trend following works, that in a sideways market you can get a bit chopped to pieces here, and having these small losses of 5 to 10%, that is that's a price I pay for also taking these large 2, 3, 4, 500% gains once in a while. So I gladly get in and out with small losses of stocks once in a while. That's a price you cannot win all the time. Here, no, we wouldn't have gotten in. And here, no, we wouldn't have gotten in. No bounce on the 20 SMA. So what we can see here is that when people are saying, well, this is a surprise, we didn't see this coming. No, of course we didn't. A 73% drop in a day because of fraud. Well, technical analysis could not have told us that there is potential fraud here. But what it could tell us is that just by looking at the weekly chart, that all of the big players are selling out of this stock. Now, how do I know that this is the big players and not the small retail traders? Well, that is the reason why I'm looking at the weekly chart, because a huge multi-billion-dollar market cap company like this, one of the largest fintech in Europe, they don't have a downtrend like this unless all of the big players are selling out. And should I say, this is not the first time there have been some problems with their numbers. There have been that was that just last year, in the end of last year, something like that, 7 or 8 months ago. There were also some debate about the numbers and the auditors couldn't find some money or whatever the problem was. But just to say, this is not the first time, and what I can see from this is that obviously the big players that should be holding billions of dollars of Wirecard stocks, they're not that interested in holding it, because if the really big players, the big funds, the big retirement funds and so on, if they're going in, then they can pretty much themselves hold up a stock. All of us retail traders, all of us what we call the dumb money, not that we are dumb, we are just not as well informed as the big players. All of us dumb money and retail traders, we cannot keep a stock up for 1.5 years, almost 2 years here, if the big players are selling out. And this tells me that we are in a downtrend here and that the big players are selling out. I should say that I showed you a couple of times that we might have lost some money. I also look at simple trend analysis, and often when we get a buy signal from this, you know, those of you that have followed my videos for some years now, that what I do like to see is some break above a former top here, a little drop back, and then a retracement and then a bounce. So I probably wouldn't have bought into this stock, but let's just say for the case of it that I actually would have gotten in a couple of small times here. I most certainly wouldn't have been in for the last long time here, up from at least around 65, 70 and down to 13. Now, why am I saying this? Is that to sound clever and be a Mr. Know-it-all? No, not at all. What I am trying, as I said at the beginning of the video, is I'm not trying to be some know-it-all smart dude that could have predicted everything, because I do not predict stock markets. What I do is that I follow trends. And when I can see that a stock has a trend that turns down, then no matter how much publicity and how much the CEO is getting into the media saying we have the finest tech in the world and we are going to be 100 times bigger, well, I don't care. Because if nobody is buying, if the big guys in the market are not buying the stock, then I'm not buying it either, no matter how good the case is. So I'm looking at the big guys. If they're selling, I'm selling. That's how simple it is. So this is not trying to predict anything. This is just, I always do this when some sort of scandal is coming up. I'm trying to sit down. I did it with Enron. I did it with WorldCom. I did with, you know, all of the of the stocks that have crashed. I'm sitting down and I'm saying, would my strategy have caught this, or do I need to adjust something? And what this case shows me is that in this case, it would have caught it perfectly. I would have been able to be in the stock in the entire trend up, and I would have been able to stay out of the trend down at least most of the time, maybe with a single little triggering into and losing 5 or 8% a couple of times. Doesn't really matter as long as your position sizing is under control. So that's it for today. I hope this was kind of educational. As you know, I'm not a financial advisor. I'm not telling you to buy or sell specific stocks. What I am trying to do, however, is teaching you some simple principles that can keep you out of losing all of your money in some stocks, and that can actually help you build a good, solid financial future. As always, you are welcome to ask me questions on the Facebook page or here in the comment section below the video. And by the way, it's also down here just above the comment section that you find the subscribe button. If you haven't done already, hit the subscribe button and the like notifications, all of the buttons you can find down there. And that's it for today. I'll talk to you again soon. Take care of yourself and your money out there. Bye for now.